Palantir Technologies has been shaping the world of advanced software solutions for more than 20 years. Initially, the company gained recognition through its deep-rooted collaborations with government agencies. Its early success stemmed from providing essential data integration and analysis tools to national security organizations, intelligence agencies, and other federal clients. These partnerships laid the foundation for Palantir's reputation as a highly specialized and effective data software provider. However, as time passed and new technological innovations emerged, Palantir gradually began expanding its horizons. In recent years, it has made a significant shift towards the commercial sector, and this strategic transition has opened the door to a fresh and highly lucrative stream of income. This dual-pronged growth approach, where both government and commercial revenue streams are gaining momentum, has not only strengthened the company's market position, but also heightened optimism about its long-term future. The enthusiastic response from the market has resulted in a remarkable surge in Palantir's stock price. Over the course of the previous year, the company's shares soared by an extraordinary 340%, outperforming every other component of the Standard & Poor's 500 index. The sharp rise in stock price has propelled Palantir into rarefied territory in terms of valuation. The current valuation might raise eyebrows, but the company's earnings growth remains robust and persistent. There's been no apparent slowdown in the bottom line, which is reassuring for shareholders. Despite the higher valuation, the fundamental business performance continues to justify investor interest, especially among those who are looking at the long-term trajectory of the company. At the heart of Palantir's success is its ability to help clients harness the full potential of their data. Through its powerful software platforms, the company enables users to collect, organize, and analyze complex and disparate data sets to drive smarter decision-making. The company's competitive edge became even sharper when it embraced artificial intelligence integration. 2 years ago, Palantir took a significant leap forward by launching its artificial intelligence platform. This launch proved to be a game-changer. AIP has quickly become one of the standout offerings in the broader artificial intelligence landscape. It has empowered organizations across the public and private sectors to leverage artificial intelligence for enhanced efficiency, accuracy, and strategic insight. The demand for AIP has been overwhelming, with organizations lining up to deploy this transformative technology in a variety of scenarios. Whether on the battlefield or in the boardroom, Palantir's tools are making a significant impact. For instance, in defense operations, AIP can rapidly identify potential threats and recommend immediate action plans. Meanwhile, in the corporate world, companies like United Airlines have been applying AIP to predictive maintenance, which has helped minimize flight delays and avoid multi-million-dollar costs. The widespread adoption of AIP wasn't accidental, it was the result of a well-thought-out strategy. Palantir introduced AIP bootcamps, which are highly focused sessions designed to onboard prospective users quickly and effectively. These sessions enable participants to go from no prior exposure to a concrete use case within just a few hours. This hands-on, accelerated learning approach has allowed business leaders to immediately see how AIP could be applied to their specific needs. This strategy has greatly contributed to AIP's rapid penetration across industries and sectors, further solidifying Palantir's position as a frontrunner in the artificial intelligence space. As a result of these efforts, the company has been experiencing explosive revenue growth, particularly in its commercial segment. Many companies that previously viewed Palantir solely as a government-centric organization are now recognizing its broader value proposition. In the most recent quarter, commercial revenue generated in the United States climbed by more than 70%, reaching $255 million. This marked the strongest quarter ever for the U.S. commercial division, and the momentum didn't stop there. The total contract value booked by this segment surged to $810 million, which represents an astonishing increase of 183% compared to the same quarter 1 year earlier. Even as commercial revenues soar, Palantir has not neglected its foundational business. This area of the business continues to grow at a steady and impressive pace, with double-digit growth figures reported quarter after quarter. What we're seeing is a rare combination of sustained performance in a legacy revenue stream alongside aggressive expansion into a new high-potential market. This dynamic illustrates Palantir's capacity to evolve, scale, and remain relevant across diverse economic environments and technological eras. The company's appeal isn't limited to just top-line growth. Palantir has also demonstrated a strong commitment to operational excellence and fiscal discipline. One of the best indicators of this balance is the Rule of 40, a metric used to evaluate software companies by combining revenue growth rate with profit margin. A score of 40% or more typically signals that a company is achieving both expansion and financial health. Palantir recently achieved a score of 83%. That's an extraordinary accomplishment, particularly when considering that only about 1/3 of software companies ever reach this benchmark, according to research conducted by McKinsey. This metric alone makes a compelling case that Palantir isn't just growing, it's doing so responsibly and profitably. That said, not everything is sunshine and smooth sailing. One of the primary concerns facing Palantir and its shareholders right now is the stock's valuation. With the company trading at 219 times its forward earnings estimates, there is understandably some hesitation among investors. At such elevated multiples, even a modest earnings miss or unexpected negative development could exert downward pressure on the stock. This kind of valuation demands consistent outperformance and leaves little room for error. The central question now becomes whether Palantir remains a smart investment at its current price point, and whether it has the potential to serve as a long-term wealth builder. The answer largely depends on your investment style. If you identify as a value investor, there are likely more attractive opportunities elsewhere, options that come with lower multiples and higher current yield. However, if you are a growth-oriented investor with a long-term horizon of at least 5 years, then Palantir remains a compelling candidate. The high forward price-to-earnings ratio reflects expected earnings over the next year, but does not fully capture the long-term gains that may result from Palantir's continued expansion in the artificial intelligence space. Over the coming years, the demand for artificial intelligence-driven tools is expected to grow exponentially, and Palantir is well positioned to be one of the leading beneficiaries of this movement. Still, it's crucial to remember that relying solely on one stock, no matter how promising it may seem, is a risky strategy. Even the most successful companies can face unforeseen challenges that impact their performance. To maximize wealth-building potential while minimizing risk, investors should construct a diversified portfolio made up of several high-quality stocks. Holding these investments over time allows for compounding growth and provides a buffer against volatility in any single holding. Palantir could absolutely be a key piece of that puzzle, a standout player in a broader portfolio that collectively propels financial success. In the end, Palantir Technologies, originally known for its government software contracts, has successfully expanded into the commercial sector, unlocking a powerful new revenue stream that complements its steady government growth. The company's artificial intelligence platform has driven widespread adoption across industries by enabling users to quickly leverage data through immersive AIP bootcamps. As a result, U.S. commercial revenue soared over 70% to $255 million in the latest quarter, with total contract value jumping 183% year over year to $810 million. While its stock trades at a lofty 219 times forward earnings, which raises valuation concerns, long-term growth investors may still find it a compelling pick due to its strong positioning in the artificial intelligence space. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.